Hi, Bill Bodner, Mortgage Market Guide. Thanks for tuning in to our MMG Weekly Recap. So, January certainly brought in some turbulence. Let's talk about what mortgage bonds and mortgage rates are doing. So, you could see on a Friday, we're wrapping up. We're up 22 basis points, which is kind of cool, but it isn't much better than where we were at the worst levels on Monday. The improvement is modest at best. We'd love to see a rebound, but we're not sure we're going to get it. Why? It's never-ending stimulus, and with the stimulus, remember last night on Thursday, incoming President Biden released a plan for $1.9 trillion worth of additional stimulus, and the Fed. They said the same day that they're going to continue to buy at least $120 billion worth of bonds per day. So there is a lot of stimulus being thrown at us, which brings aid to the economy, which bonds don't like, more supply to the bond market, which bonds don't like, and it raises inflation fear. So it's challenging to see things get much better unless things get worse. And what is that thing? What could make things worse? Well, certainly the virus. We're watching another hard lockdown in Europe and fears that it's going to kind of come here, even though now we're having states change their positions a bit as to opening up because of just the need to get out. I mean, stimulus makes a lot of sense and we need it badly, but we also need to reopen economies. It's what good is a check if I can't sell anything, even PPP and some of the small business. If a small business can't open, what good are all these checks? So there's still a lot of uncertainty, and I think that's why it's a little skittish. But the knee-jerk reaction to the stimulus package right now, stocks are selling on the news. I think stocks front run a bit of on the notion that we knew it was going to be a big stimulus bill, and there's probably more coming. At the same time, on a technical basis, as we move into next week, we got to be thinking about this. A lot of housing reports that we need to be following, and then the week thereafter is the Fed. They're pretty much sitting on their hands right now on just going to continue to support the housing market. So, but from a pipeline management, you're talking to clients. This was an increase in rates, and we need to be watching this 200-day moving average very carefully because we do not cross above it or below it very often, and the news will dictate whether we get beneath it. And the inflation fear. So that's what we're watching heading into next week. I hope this finds you well. Have yourself a great weekend. Talk to you soon. Bye for now.